Today's subject, more pesky acronyms.
Hi, I'm Jeff Banks, the founder of Banks Consultancy,
And I'm Robin Banks, the CEO of Banks Consultancy.
and these are our tidbits of the day, where we look at each week acronyms and terms that people might run into and we're just expected to know. Okay, Robin, what do we want to know today?
Tell me what ABN is.
ABN. A lot of people call this an ABN number, which is actually one of those furfies that we talked about in week one. ABN is Australian Business Number, ABN, whereas if you put number after it, it becomes Australian Business Number. Now, each business that runs in Australia, whether it be a company, partnership, trust or sole trader, or even a superannuation fund, where they're carrying on a business needs to have an ABN.
Thanks, Jeff. What about then, let's move down the alphabet, ACN.
Well, ACN is very similar to an ABN. All companies have to have an ACN or an Australian company number. This is issued by ASIC when the companies are incorporated. If you look at the ABN for companies, it's normally only 2 numbers more at the front of their ACN. So their ACN actually carries through from their company registration through to their business registration and so on and so on. So if you change the name of a company, the ACN and the ABN remain the same.
Oh, so less numbers to remember.
No, ABNs tend to be very long. ACNs are also 9 numbers long. No one can ever remember those.
Oh, thank you for that, Jeff. I'll work my way through that one.
Have you got another one for me?
TTR.
TTR. Okay, there's an interesting one. TTR stands for Transition to Retirement. Now, that's a strategy where people over the age of, say, 55 might very well start taking money from their superannuation fund even though they're still working, much like you do.
Oh, thanks for letting people know how old I am, Jeff.
Not a problem. Between 55 and 60, you can take a certain amount out of your superannuation fund as a pension, pay a small amount of tax. Between 60 and 65, it becomes tax-free based on the present legislation. And after 65, you can actually take the whole amount of your superannuation out of your fund if you wanted to. Transition to retirement is a good way to enhance your disposable income in the period leading up to your retirement, should you wish to. Anyway, that's enough for today. I'm Jeff Banks.
And I'm Robin Banks.
And we are Banks Consultancy, not your ordinary accountants.